Okay, so today I want to talk about should you have a corporation or not, right? I meant to do this video first before the other video, but whatever. So what I really wanted to talk about, because a lot of people ask me this when they're doing their consults or their one-on-ones, is like, okay, what should I do first? Should I get incorporated or should I just start a business? Should I start doing overages or should I start doing tax deeds? And personally, I always tell people number one, it depends on your pocketbook, right? I always tell my students and my one on one coaching clients, if you're doing tax deeds, whatever you have to invest, always invest half of it because you never know what's going to come up depending on what state and county you're doing tax deeds. And then secondly, if you're doing overages, it really doesn't matter about the pocketbook, right? But what does matter is if you do get a claimant and you're filing and you're processing everything under your name. Now, some of you guys that do have my Instagrams or some of you guys that know me personally, like I'd be so elated when I do get a check. And most of the time you will see them in my name only because I'm not like thinking it through, or I'll call the county and they want all this extra paperwork. And I'm like, okay, well, I'll just do a DBA. So it'll be like Mika Coleman doing business as your surplus recovery, right? But when it comes to tax time, I just give all the paperwork to my tax guy because you guys, I'm like a 2-year-old when it comes to taxes. I kind of know a little bit, but I don't know a lot. All I know is that my entire life I haven't had to pay like a buttload of taxes is because pretty much when I started investing, I had a corporation. Thank God I did have a mentor that told me whatever I do, get incorporated. So to answer your question, should you get incorporated or not? I don't ever want that to be an obstacle for you to not start investing. So I do tell people you can start without being incorporated. However, if this is something that you're serious about and you're serious about doing it, depending on what state, I would say incorporate now. And the reason why I say depending on what state is because when I got my first corporation, I paid $1,500. The person that did it for me, they didn't tell me that I had to pay an $800 annual fee. So I got penalized on that. And then the tax person I had obviously did not know how to file corporate taxes. So I had a lot of trial and error. So I do know a lot about it because of all the mistakes that I had to encounter in the past. So like if you're really new and it's just like totally overwhelming and you're like, you know what, I need to just focus on investing right now and making money. I totally would understand. I totally understand. But what I would suggest is if you do want to invest and you do plan on making some serious money like over 10,000, I would definitely do a DBA. One of the things that I do want to point out, hopefully you don't fast forward and miss this part, but one of the most important things of why I always tell people that they should get incorporated is because one of the good things about being incorporated is it does protect you from your personal assets. So that leads right into what are the pros and the cons about investing, about having a corporation and investing. So one of them is that it does protect your personal assets being incorporated. Number two, you can raise funds for your business. Now, I personally haven't done this, but I do know people that have. So you can trade because you do get what am I trying to say? You can create stocks for your business. So you could trade stocks in your business for services, right? So that's one way that you can raise money for your business. Now, I do it the quick and easy way. If anybody knows anything about me, I always like to take shortcuts. So another thing I like about being incorporated, instead of like, asking my mom, my sister, my grandma, or my aunts, for 5,000 here or 2,000 there, which I have done, you guys. And boy, there's a story behind that. Sometimes it even gives me tears. I like literally lost like over $80,000 of my mother's money. But I gave most of it back from another investment, but the loss of it, that it just was, I never like ask family members, but your mom, they always love you, right? But what I learned from that experience is I'd rather have asked the bank and lost their money and then just had a bad credit, right? So another thing that I really like about being incorporated is that you can leverage your corporation and get assets. So the quick and easy way is, number one, I don't care what nobody says out there on YouTube. I would love for someone to challenge me. They're saying that you can do this without a personal grantor. You do need to be the personal grantor. So the quick and easy way is, if you do have good credit, you can leverage business credit. So what I love about, having a corporation is that, if this is a big if you have good credit, you can walk into a bank today if you're incorporated and you can get a business line of credit. Now, I personally, and this is only my personal opinion, I always tell people I don't want anybody to take my word as bond, because there's so much information out there and there's so many things that people say and they're like, no, this is the way, this is fact. I'm not that type of person. I just basically like to tell you my way, what I've experienced and what I suggest, but it's not always the best for everyone. For me, I like taking business lines of credit out. Why? Because they don't require you to, have your W-2 returns. They don't ask you for your net over the last 2 years. They don't ask you all the stuff that you need when you're trying to apply for a quote unquote business loan. It's literally a line of credit. And what I love about that is that whatever amount you use, that's the amount you pay for. And you don't have to pay for it in a lump sum. So that's why I always tell my people, and even in my book on, the Entrepreneur's Guide to Business Credit, is to get business credit first, because it's like a credit card that allows you to get cash without a 26% fee, right? It's literally like between like 2 and 4%. So that's one of the things that I really like about being incorporated, is that you can get business lines of credit. And matter of fact, my first tax deed I pulled from my business line of credit. So it wasn't my cash. Did I have the cash in my account? Absolutely. But why would I use my cash when I could use the bank's cash? And as long as I sold it within the next 30 to 60 days, well, let me just tell you this. So it was $10,000. And I think for the business line of credit, like for that month, it was like 150 bucks. It was really low, right? But I think it took me like 60 or 90 days to sell the property. But guess what? I had my cash and I was using my business line of credit cash. And the biggest pro, about business lines of credit is that it does not show up on your personal credit. So like if I was really trying to buy a house or a car for my family, that's not going to affect me personally. So that's another thing of why I think having an incorporation is important. Now, the cons about this is, number one, if you're living someplace like California where they charge you an $800 annual fee, then and you're barely making it, that might not be conducive to your pocketbook. Number two, in my last video, I was talking about the difference between an S Corp and a C Corp. If you do a C Corp, you're being double taxed. And then also too, you do have to file them separately. Corporations are filed before the personal. So that's like another expense. So those are some of the cons personally, but I personally think the pros outweighs the cons. And then you also have extra state and filing fees. So those are some of the things that you would incur if you do decide to get a corporation. So I always like to wrap it up and sum it up of like what this video is all about. And it's about, should you get incorporated or not? I personally feel like the benefits of being incorporated outweigh the bad things about incorporation. But like I said in the beginning of this video, it always depends on what your pocketbooks look like. But I also do want to mention too that a lot of people ask me, where do I get incorporated? Like, should I get incorporated here? Or should I get incorporated there? I basically tell everyone that you could incorporate anywhere, but you have to be smart about it. If you're going to incorporate somewhere, number one, I always say, let it be like a tax-friendly state like Texas, right? I love Texas. Or if you do have a W-2 and you're actually working at your job in a specific area and you're actually going to run business out of there, just file it in the state that you are. Because I could do a whole nother video on trying to skip out on the 800 annual fee in California and not pay all the BS fees that California makes. But at the end of the day, it costs you more because you have to file a foreign corporation. It was just so much of a headache that it was easier to just pay the money. Just it was easy. So a lot of times people ask me, well, I heard Delaware is good for corporations. Well, yeah, Delaware is good if you don't want anybody to know that you own that corporation. But then if you're filing taxes in California, you have to do like some type of foreign status. Like, trust me when I tell you, I've tried all the shortcuts and it's not worth it. I'm just telling you that right now. So anyway, what I want to get back to is that you can literally file a corporation anywhere if you like. If you do decide to do that route, I would just say make sure that it's a tax-friendly state, like Texas. I'm not promoting Texas though. I'm just saying they don't have no state tax. There's another state that doesn't either. But I do a lot of business in California, so I keep my California corporation, but I now have one in Texas. So we'll see, Anyway, that's a whole nother story. What I wanted to get is that, do you need to file a corporation or not? If you're just starting out, you don't necessarily, but if you find yourself making, 10,000 and then you're working on like another 30 or $40,000 deal, get incorporated if you don't have a W-2, because most of the time W-2 earners, they're automatically taking their state and taxes. So they have a write-off. Whereas people like me, if you make over a certain amount, you only can write off so much, even under a corporation. So it's just a matter of how you strategically do your taxes. And like I always tell people, I'm not a tax advisor, so don't take any tax advice from me. But if I were you, just on the principle of leveraging other people's money to get cash to invest in tax deeds, I say all day get a corporation. So I hope this video helps. If you think that this was helpful, please like, please subscribe, make a comment. Tell me if you're going to get incorporated or not, or what you would prefer to do if you were to get incorporated. Would you do a LLC, a S Corp, a C Corp? Let me know. Give me a comment.